All right, y'all, back to war. Boy, one hell of a week it's been. What a fun day to trade today. And by the way, I love hearing everyone making money out there this week. So well done. Inspires me to keep doing these videos each night. So great job. Now, we had a big move higher this afternoon, right? So everyone's probably trying to buy the pullback tomorrow. Now, pullbacks, some of them are really easy to time the entries, and we'll cover those tonight. But some of the pullbacks, though, they're not as easy. So tonight, I want to go over the easy stuff, obviously. But more importantly, I want to cover some of the more difficult entries that we have a game plan to time that perfect pullback entry, no matter what the market throws at us on what should be another fantastic Friday morning. So charts are ready. Enough of the intro. Let's keep the good times rolling this week here. And man, oh man, so good to hear you guys all making money out there in these setups here this week. Charts look pretty darn good right now. S&P and SPY is already. Nasdaq, triple Qs are already. I have four clues here on the charts tonight that are telling me where I think the winning trades are waiting for tomorrow. Two of those four clues are right here on these hourly charts. One of those four clues is we're overall bullish on the hourly. Bullish overall. Remember, I like to use the hourly chart as a bit of a directional filter, and we're definitely bullish overall. That will give us our directional filter for tomorrow. A second clue, though, on these hourly charts, we have a range on the S&P SPY, a range on Nasdaq triple Qs, and we have a breakout of that trading range on both of these charts. One thing I hope you learn from me on these videos is anytime we see a breakout pullback is it's not an if, it's a when. So right now on the S&P SPY, I got 98 3/4. And of course, same basic idea here on the Nasdaq around that 890.5 level. Keep that in the back of your mind. We're going to talk about those key levels a bit later on in this video. So 2 out of 4 clues. We're bullish overall. Let's check schedule for tomorrow. I got 2 more clues on some faster time frames. But let's check schedule though first. There are 3 things on my radar for tomorrow. First thing is the retail sales number at 8:30 Eastern time. That is the big news we know about tomorrow. The second thing I'm watching for tomorrow is all the tariff talk. We heard about reciprocal tariffs this afternoon. That is always kind of an ongoing thing we're watching right now. And the third thing on my mind for tomorrow is tomorrow's a Friday. There's 2 things you want to remember about a Friday morning. Fridays, I want to get in as early as I can when the getting's good, and Fridays, they love to run. So get in early as I can, and I always try to leave a runner on a Friday afternoon because go back and see for yourself. Every couple of Fridays, we just pick a direction. We keep going and going and going. So 3 things in the mindset for tomorrow: retail sales tomorrow, tariff talk tomorrow into next week here. And don't forget too, next Monday is a holiday, so no newsletter on Monday. And again, Friday mindset, get in early when the getting's good, and promise me, leave a runner on a Friday afternoon. Okay, so where do we leave off here? I mentioned 4 clues overall. 2 of those clues are right here on the hourly time frame: the bullish overall bias and the breakout pullback levels, the key levels here on the 60. I have 2 more important clues, which might be the most important clues right now on the tick charts. Now remember, tick charts are my favorite time frames to use to time the entries. They make pattern recognition a whole lot easier. All the time frames, if you're watching for the first time tonight, are in the upper left-hand corner. And that yellow line right there, the only indicator we use in our trade room is the 21 EMA. I believe that's all you need to find lots of winning trades each week. So what are 2 more important clues? Well, we have a somewhat similar scenario tonight. We've seen these all week this week. We have multiple ranges. Range right here, and it looks like a new range forming up here. Now, why would that be an important clue? Well, because the new range is a magnet, and the previous range is begging for a breakout pullback. Now, if you look closely at the chart right now, you'll notice there's that 60-minute level right there at 98 3/4. That's one important clue. Another big clue here is this channel. You'll notice I've drawn that trend line off these highs here, connected it down off of those lows. So when you put all these clues together right now, boy, it's very easy to see that buying pullbacks in and around that area is probably where the smart money is waiting for tomorrow. Now, I talked about this earlier. Buying pullbacks, this sounds very easy. And again, there are some very simple, easy pullbacks. We'll talk about those right now. But as we get deeper into this video, I want to kind of kick this up a few more notches and talk about some curveballs, some more difficult pullbacks. That way you're prepared for them. You don't get trapped by them, and you can capitalize on the more difficult pullbacks that we're going to get eventually here, maybe tomorrow or into early next week here. So let's talk about kind of the easiest pullbacks first, and we'll ratchet this thing up here a bit higher here as we go. One of the easiest ways I like to look for pullbacks is a nice sharp pullback. Please remember, the sharp pullbacks are always the best ones. In my trade room, we always say the best pullbacks are almost scary, how fast they go. Here's why. As it pulls back now, what happens is all the rookies who don't have a lot of experience yet, they see that sharp pullback, they think it's a reversal, but it's not a reversal. It's only a deep correction after this big move going higher. In these scenarios, I love to look for basically a bear trap. Wait for the pullback, let the bears try a couple times. Now remember, I always want 2 tries and a higher high to those 2 tries here. Why? Because now I know where their stops are. And now I can use their stops, squeeze those bear stops, and fuel that run going higher. Now, one cool thing about ranges is that ranges love to rotate. So this goes in a range up here. This will want to rotate back up into that range. Once it does that, watch closely here. As it goes higher, I'm going to look to add to my winners here. The way you do that is you look for this simple pattern. First of all, it'll separate off that moving average. Separation is so important to add on to your winner. Separation, higher high in price, and the add-on I like to use is right below that low. So one really easy way to time a perfect pullback is to look for a sharp pullback. Again, it'll be scary. It'll be a bit uncomfortable. If it's uncomfortable for you, you're on the right track. Ideally, it'll be around that key support level we mentioned earlier. That's called a bear trap, right into an add-on combination. And remember, Friday mornings, let it run. Let it run. Now, another really easy pullback entry, we may not get that bear trap down there. Sometimes what happens is, sometimes we get a really sharp, again, a scary pullback, scarier the better in my opinion, and we don't get a chance to trap the bears in and go back up again. It V-bottoms and whoop, and runs right back up again. If it V-bottoms off that low, what almost always happens is we start grinding going higher. That grinding movement is a dead giveaway. Mark a trend line off the highs, bring that trend line down around that low, and then look left, find some of these prior swings. My goal is I want to buy the first test of that channel, right? We always say first test is the best test. The first touch of that channel, and ideally, guys, get right below that prior swing, a strong green candle closing back above that 21 EMA. That is a gorgeous way. Now, again, I would love to buy it down here, but I don't control these markets. I will take whatever the markets give to us. So that V bottom reversal is a really easy way to do this. Now, I have 2 more really easy pullbacks. And again, we're going to dial this up a few more notches as we go deeper into this video. Before I do that though, let's slow down for a few moments because I know most of you guys watching right now, you know these patterns already. I get so many emails on Twitter X in the comments this week here. You guys making money in this, so really well done on that. But if you're here for the first time right now, this might be a brand new strategy. Don't you worry. I teach this entire system. In fact, I have a ton of examples, bear traps, add-ons, breakout pullbacks, multiple ranges. Guys, I have so much more I want to share with you. I can't do it all here on these videos. What I'll do is I'll put a link up top here for you. Upper right-hand corner, hit that link that popped up there. Take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each morning. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current strategy, hit that link that popped up there, take that free trading course, Everyone loves all the trade examples I include in that short video series. The best part is it is 100% free for you. And also to keep in mind too, in case you get the link up top there, I'm going to put all the important links you'll need to learn the entire roadmap, all the entry techniques. I'll put the links you need in the description of the YouTube video. Start first there. Most people start making money on their own just with that free video class. So start there first. And if you're on Twitter or X, I post a ton of charts and videos and mindset stuff throughout the day. So if you're on Twitter X, give me a follow again. All the details you'll need to learn a lot more and hopefully earn a lot more are linked up here in the description of this YouTube video. Okay, let's keep going though. I get a few more kind of the easy pullbacks, and we'll talk about the more difficult ones here as we go deeper. You know, I mentioned earlier, I want to get that nice deep pullback, right? Get down around that prior range. I would love to go just below that 98 3/4, trap the bears in and whoop right back up. That will be my favorite trade for tomorrow. But you know me, right? I don't control the markets. All I can do is game plan different scenarios based on what we get. What if all we get is a shallow pullback? I have my eyes on this 61.22, and I'll show you the similar level here on the Nasdaq in a moment. This is a trading range, right? This is a trading range. So remember, ranges, they love to rotate, right? They love to rotate. They'll go down, up, right? Okay, we teach more of this in that free video class I mentioned earlier. The amount below, the amount above. We like to use triangles, right? Megaphones. Okay. So if we understand that basic principle, then if we only get a shallow pullback here, what should happen? The market now will want to rotate, right? It'll want to rotate back up roughly about the amount we went below it. Now, this, of course, is a bullish range in an overall bullish market in the 60-minute time frame. So these types of trades are more likely now to break out going higher. Keep that in the back of your mind. If all I get is a shallow pullback, what is my concern? My concern is we've made a very big move over the past few hours here. We're way high up on the chart. So in my eyes, a shallow pullback in some situations is not that big of a deal. But right now, though, I see this as being a bit too high to buy. Now, if you've taken my free video class, you know what I'm going to say right now. What is the entry pattern we use when we're buying relatively high? It's always going to be what's called a technical trap entry. It's a higher high in price and move right below that low. Strong green candle, closing above that moving average. That is, again, a shallow pullback. So again, I want to go down. I want to trap the bears in. If I do it down here, look. If I do it right here, I can risk small to earn much larger, right? I can be somewhat aggressive on that entry right there. But if all I get is a shallow pullback and back up again, see now think about that, right? Now my risk is here. This is not good, right? That is a very difficult pill to swallow, and you're not going to get a lot of people excited about that entry, right? Remember, we need to harness the self-fulfilling prophecy. It needs to be attractive to everyone else in order to work well for us consistently, right? Okay, so in these scenarios, the way that you offset that poor risk-reward ratio is a bear trap pattern. I want to get in below that low. That way I can take my 1-to-1. That way, right? That way my risk reward is now more balanced, right? Makes sense? So a shallow pullback, I don't want to buy above that high because now I'm buying too high. I want to buy below that low. That will offset my risk reward ratio. Now risk there, reward there. See, that is a trade I can get down with. That's a trade everybody else has a good risk reward on. Those are trades you can build a career on. Now, this is where things get fun. A shallow pullback, what does it tell us? We're still very bullish. We're still very aggressive to the long side. So here's a trick now. Measure the amount below. Project that back above. That creates our target. Remember, rotation, like over here, right? Rotation. Now, look what happened right there. Whenever we break through, if we break through a pendulum swing, if we break through a pendulum swing, what do we then start doing? We then look for a breakout pullback. Exactly right. We look for that breakout. We then move our focus now to buying that breakout pullback. We wait for that, again, sharp, right? Scary, right? The scarier it is, usually the better it'll perform. We don't pick the bottom, do we? No, we don't. We wait for the bears to come in. We let them try twice, and we stop them out, and we use a bear trap running higher here. Now, let's back this up a couple minutes here. What happens though if we run higher and this thing collapses back down again? Okay, you should know this by now if you watch these videos consistently here on this channel. What do? We mark the amount above. We mark the amount below. You can see where this is going, right? Now, as this thing runs lower here, this will feel like a reversal. Okay, this is the definition of holy you know what, right? This is the definition of I'm scared. This is the definition of scary right here. That will feel very uncomfortable. But once you know how ranges work, you know this is a bear trap 9 out of 10 times. 9.9 out of 10 times, all right? So once it rolls over here, now our risk reward ratio looks much better, right? Okay, now I go in. Bear trap, right? Trap those bears in once, twice. Remember, ranges love to rotate. As we go higher, what do? You don't kick your feet up on the desk and bask in your P&L. You get ready to add to your winners, right? Don't let a winning trade make you lazy. Keep on pushing it. If you get yourself in a good position, add more to it. That's the way you grow exponentially fast on your account. And again, when I say add-ons, remember the key is that separation, right? That separation off, right? Like over here, right? That separation, it goes up, it pulls back. Is there any wonder why everyone bought, right? No, of course not, right? It's the same pattern. It's just some are prettier, right, than others, right? That separation is what gives it away. It's that same idea over there. Okay, those are, in my eyes, some of the easier ways to time the pullbacks. I know I covered a lot here so far, so don't be afraid to rewind the video and go back and watch it over again. I know a lot of you guys are making some great bank right now because you're trading this range rotation here. Now, let's go Nasdaq, right? Nasdaq, I want to kick this up a little bit higher gear here, and I'm sure you can I'm sure you can handle that, a little more advanced tactics. Now, on the Nasdaq right now, similar situation. We're kind of bullish into a range. See what I'm doing here, right? I'm rotating right off of that low. Okay, we break out of that range. This is that breakout pullback level right there, 21,890 and a half. You can see it there on the chart. Before I dive into the tick charts though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe because YouTube rewards me every time you like, share, and subscribe to these videos. I know we're all busy people these days. I appreciate you spending a few valuable minutes with me here every evening on these videos. So thank you from the bottom of my heart for all the likes, subscribes, all the ongoing support. Now, I promise I'm done begging for likes, and subs. Let's go dive in now. Get your hands dirty here on those tick charts. Over on the tick charts here, and you'll notice right away, it's a 4,000 tick chart. It's a bit lower time frame there. The Nasdaq is less volume. What do you see right now? Well, first of all, range right there. Is there anybody surprised? Look at this pattern right here, right? They break out. Oh, I'm shocked. It pulls back, and what do you see? Bears once, bears twice, and squeeze running higher over and over again. These patterns happen over and over again. You don't need this stuff to be complicated once you learn the basic fundamentals. Okay, enough of that. So range right here, right? Range right here. Makes sense, right? Okay, remember, whenever we see two ranges, the new range is the magnet. The previous range is the breakout pullback area. I got my channel on here, off the highs. I'm bringing it down off that low, right? Okay. And then that 60-minute time frame level is all the way down there at 21,890 and a half. So if I had to guess right now, I would guess the most of my money is waiting down here. And again, that might be nice because it might give us a really nice, sharp, right? Scary pullback. Remember, we don't pick the bottom on this. We wait for the pullback. The bears try twice. We bear trap. And what do? We add to our winners. As you can see over here, sometimes we don't get the add-on, right? So it's not a guarantee we get the add-on. If we do though, we take it, right? So higher high in price, below that low, there's that bear trap into the add-on, back to retest the high here. All of the same stuff we mentioned earlier on the S&P, right? The V bottom, it whoop off that low, right? The V bottom. And that grinder, that V bottom first test is the best test. And again, if all we get is a shallow pullback, right? Shallow pullback. Remember that higher high, always a higher high. Shallow pullback, buy as low as you can, right? Buy as low as you can. Buy as low as you can on a shallow pullback. There will always be that technical trap pattern I teach inside the free video classes. And again, if all we get is a shallow pullback, now measure below, measure above, that gives you your target now. And again, if we get that shallow pullback and we really jump, then what do? We look for that breakout pullback off that trading range and rinse and repeat over and over and over again. And again, if we wind up running and dumping back down again, which does happen a lot, the amount above, the amount below, again, this will feel very scary. This will feel very scary. It's not reversal. Look at the hourly chart, right? Most often, this is nothing more than a bear trap, and a fun bear trap, I would say, because this one, I swear you can feel the market just getting crushed when it snaps back up into that range. Okay, I've been teasing you with the more difficult pullback here. The most difficult pullback, well, now, first of all, I mentioned earlier that the best pullbacks are scary, right? The best pullbacks are pretty scary, right? As it runs lower, like that red candle right there. As it goes lower and then bam, right? That strong move down right there, right? Bam, that strong run down, 1, 2, back up. The best ones are gonna make you feel uncomfortable. The worst ones are the ones that slowly grind lower. They'll pop lower and they'll grind, right? The grinders are really tough. What happens is it drags down all the moving averages, the 21, the 50s, right? The 200s, they all get dragged down with them. And because moving averages are kind of a reversion of the mean, right? It kind of sticks this thing down here. So if I see this thing pop down and begin to grind down, we talk about how grinding markets are some of the most difficult to stop. Okay, so if I see a grinding move, if it pops and grinds down like this, what happens oftentimes is we start getting bears that will come in and they'll bull trap off that high. For whatever reason, it happens all the time. Most of the time it happens after a really big move. Right? Big move, we're way high up. The market has to pull back a little bit and bears attack this thing while it pulls back. So how do we avoid this problem? Because again, I don't want to try buying too high on that if it grinds down, because now if I buy as it goes higher here, I'm getting trapped in, right? I'm getting trapped in as it grinds down. So the way you resolve this problem is you do it with a technical bear trap pattern. Here's what it looks like. As it rolls down, I wait for a pullback, and I know bears are trying to sell right here. I know they're trying to trap me in. Let them try once, let them try twice. Very important. Higher high, I want to be right in underneath that low, Now, many times, it'll run and grind down. It'll V bottom off that low. Very difficult. Those are tough to predict. But when it V bottoms off that low, now we go right into buying as low as we can and buying underneath those swings. All right. So again, the sharp ones, right? The sharp ones, those are the ones that are easier because now it fools the bears, right? Now the bears get short low and I can buy into their stops. But again, if it grinds and grinds and grinds, if it's sticking right on top of that moving average and grinding down right now, slow grind, it'll be slow, it'll be heavy, you'll feel it, right? It won't feel sharp and scary. When it grinds down like that, it's probably trying to get back to that 60 level. When that happens, it's once, higher high, twice. I want to get in underneath that low. Remember, I want to be buying as low as I can. That way, I'm in the green on that trade. I can move that stop up to that point of entry. If I do get one more shot going lower, I'm already in the green. I've already removed risk. That is the best way to avoid that bull trap if it pops and grinds going lower. Many times, again, it'll just shoot back up here. We'll start adding more to our winner. As it separates off that moving average, right? We'll start adding more to the winner here and getting in underneath those prior swings. And also, one more thing here too. If we grind down, we oftentimes will get that 1, that 2, we'll get that bear trap entry. It'll pop up. But again, what happens is when you get these grinders like this, the market wants to retest that low. When it does retest that low, remember, in a bull market overall, a double bottom retest is a gift to these buyers. Those bears try once, try twice. I can be a lot more aggressive on that double bottom, what we call a retest trade in our trade room, right? So again, the scenario is we pop and we grind down, slow, heavy. It drags these moving averages down along with it. In that situation, we're buying as low as we can. Quick first target, get rid of that risk. It's a Friday, so leave a runner. Hopefully we get lucky, runs better to the high here. And also too, remember, if it doesn't keep going higher for us and we see bears come in and short this thing back down again, I'll take myself out at the point of entry. Once it retests that low now, remember, I can be a lot more aggressive on the retest trades, right? It's a bear trap. I don't need to be as specific on the entry, on the retest. As always, right? It's that failure pattern. It's that add-on pattern. And the goal, of course, here now is go back up and retest that high. So that is a bit of a curveball. Remember, grinding markets are difficult to reverse. So that grinds down off that high, I want to buy as low as I can because I'm worried that as it pops up, more bears are coming in. And again, they're probably in this scenario trying to nudge this thing below those key levels I mentioned earlier on the hourly chart. If they retest the low, trap those bears in, it's another bite at the apple. I can be a lot more aggressive on the retest. And as always, we'll make more money, add to your winners, leave that target back to retest the high. Again, Fridays love to run, a little piece to run, sometimes all the way into the close. All right, guys, that is the more difficult curveball we're watching for tomorrow. Maybe we get it, maybe we don't. Either way, you are ready for it with a game plan to make some more money no matter what these markets throw us on Friday into next week. Now, that's the plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room every morning, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to learn and trade along every morning with me at the opening bell. I'm going to put all the important links you need to get started in the description of the YouTube video. Start first on that free video course, enjoy all those trade examples, then come join me in my trade room and we'll do it together every morning at the opening bell. In the meantime, be well out there, be nice to each other, have a fantastic holiday weekend. Be back on Tuesday with the next video here on YouTube. In the meantime, be here next time. Boya, adios amigos. Bye for now.